For our final panel, bolstering inclusive growth and resilience within societies, there are really few words that can do justice to our two final speakers, especially in the area of using innovative financial services to better the livelihoods of the poor. These two are truly giants and early movers. However, you may not be able to tell how accomplished they are when you first meet them, purely because they're just strikingly humble. So allow me to be honored to introduce Alison Eskesen and Tilman Ehrbeck. Thank you. Tilman's joining us from DC and Alison in Singapore. So let me quickly introduce them to you first. Ladies first, Alison Eskesen. Alison is a seasoned international development and CSR executive, having worked for over 20 years at the intersection of development and finance. In more than 30 countries worldwide, she has built a track record of measurable social and environmental impact by cultivating strategic partnerships among governments, private banks, foundations, and impact investors. Alison is currently the Asia Pac director for Mastercard Center for Inclusive Growth. Previously, she was with Grow Asia, an agricultural partnership catalyzed by the World Economic Forum and ASEAN Secretariat. She spent the majority of her career in the U.S. Agency for International Development, we call them USAID, where she mobilized $2.8 billion in domestic capital for local development projects by structuring and negotiating innovative financing mechanisms. Alison holds a master's from Columbia and bachelor's from Colgate, and also she is a Fulbright scholar in Paraguay. Now let's move on to Tilman. Tilman believes that luck favors the prepared. I love this line too. I think I'm going to steal it as well. He thrives when stellar entrepreneurs, tech-led business model innovations, and untapped market opportunities all come together. He co-manages Flourish Ventures and invests in actionable ideas that help people improve their financial lives. He currently serves also as a chair of the advisory council to the UN Special Advocate for Inclusive Finance and Development. Before Flourish, Tilman was a partner at Omidyar Network, which of course is the foundation and impact investment firm founded by Pierre Omidyar, founder of eBay, and his wife Pam. Tilman built a global financial inclusion team there. Prior to that, he was the CEO of CGAP, a global partnership to advance financial inclusion at the World Bank. Before CGAP, Tilman was a partner at McKinsey, an executive at the IMF, and a journalist in Germany. He also holds a PhD in economics from the EU-affiliated European University Institute in Italy. Okay, you two ridiculously qualified people. Why don't we start again with ladies first, with Alison. Alison, you've always been in the public sector. Can you tell us a bit about your journey from public space to Mastercard, and why join Mastercard? What exactly is the mandate for Mastercard Center for Inclusive Growth for those of us who are not familiar?
Thanks, and thank you so much for having me. You're right. So I've spent the overwhelming majority as a donor, right? So whether it was USAID, I was with the UN, I was with Rockefeller for a little bit. And those were amazing experiences. And one of the things that was extraordinarily frustrating at the time, but I appreciate so much after the fact, is that each and every person who showed up at those organizations showed up because they were 100% passionate about driving social impact in their particular sector. And they would die on their sword before conceding that their sector was somehow less important than somebody else's, right? So if you feed children, children will do better in school and economic growth will happen. No. If you have entrepreneurs who are successful, those parents can then pay for the school fees and therefore children will go to school and they'll have health care. And it was amazing, that experience. And when I thought about coming to MasterCard, it was a deliberate analysis of, is this a company that is just talking, or do they walk the talk? And are they actually putting their money and their assets where their mouth is? And they are. I mean, so the Mastercard Center for Inclusive Growth was created about 6 years ago. And we deliberately sit between the Mastercard Foundation, which is humongous, and only operates in Africa, and our business. And our CEO went to the board to say, there's got to be another way to think about corporate philanthropy and how do we drive social impact as a company. And they created the Center for Inclusive Growth to be able to leverage all the assets of the company. So certainly we have philanthropic money, and after the U.S. tax reform, or as a result of the U.S. tax reform, the company decided to give the Center for Inclusive Growth through the Mastercard Impact Fund $500 million to say, let's figure out how do we make a difference at scale in a way that's meaningful, because inclusive growth or economic growth that's equitable really is a macro problem. And so you can't solve it at a micro level. And so when Ajay went and really stimulated the conversation and forced the conversation, we were created to say, let's figure out how to take the philanthropic investment, certainly to leverage the other assets that the business has. So expertise, data, technology, customer relationships, our brand. How do we take all of those things to really drive social impact that is scalable and that's meaningful at a macro level around the world?
Wonderful. Well, they're very lucky to have you as well. And so I hear that went from our last conversation that two areas that Mastercard really cares about are income inequality and data inequality. Do you mind elaborating a little bit more on how these gaps can be closed? Any specific case study you can draw upon?
Yeah, so you're right. Income inequality and data inequality we see as the two most pressing problems in every nation, regardless of whether or not you're a wealthy, flush nation with a very organized labor market or a developing or emerging market. We see these as issues that really transcend the entire world. And examples of how we started to think about closing that, we focus on 4 strategic areas that we think drive change in those 2 problem statements. One is financial security. The other is the future of workers and really thinking about the gig economy. What do these digital platforms do, and how do we prepare workers for good paying jobs of tomorrow? In addition to those 2 areas, we do a lot around data science for social impact and understanding how data science can be used in the social space to accelerate meaningful change, and then also economic development. And you asked for examples. So one example is in Indonesia, where we have a Future of Workers flagship program. And there we took a generational approach. We looked and said, if the digital economy is going to grow substantially, and already Indonesia has 5 of ASEAN's unicorns, if they're going to continue to have that, how do we prepare 100,000 Indonesians over the next 3 years to be successful? And so that means we work with young girls, because we know from research that around the age of 14, girls simply decide that they're no longer good at STEM. And they start to redirect themselves off of those educational pathways, which means the pipeline going into university, the pipeline going into tech companies is always going to be skewed. So how do we excite young girls and show them the applications of STEM topics to keep them on that educational pathway? We also work with vocational students, and we looked at it and said, what are some of the professions that are going to be critically important in Indonesia going forward? And one of them is cybersecurity. As you have more and more Fintech unicorns, or just unicorns in general, you have more and more attention from around the world of thieves who want to break in. And cybersecurity is a space where you really want to have as many homegrown specialists as possible. So it's not the type of job that easily gets completely outsourced. And to give you an example, the Indonesian police is actually the largest employer of cybersecurity specialists. And so we work with vocational schools to prepare students to attain a global cybersecurity certification, because that helps to offset the historical stigma of being a vocational student, not a university student. Because we know a lot of vocational students oftentimes come from lower socioeconomic families and may not necessarily have role models who work in offices every day. We provide a lot of soft skills to those students along with the technical skills so that they know how to create a CV. They know how to interview. They know how to work in a team in an office environment, how to troubleshoot, how to advocate for yourself in an office environment. Because ultimately, we want them to have the technical skills, but we really want them to be successful in job placement and successful in their careers. And another piece of this flagship future worker program, which is called Mastercard Academy 2.0, is looking at entrepreneurs and mid-career professionals. And there we're doing two things. We provide mentoring services through a digital platform, which has been remarkable in terms of the demand and the uptake. And after our first year, we saw 1,200 new jobs be created from entrepreneurs who attribute the job creation because of the advice that they implemented from their mentors. It is very actionable. So one of the things that was said earlier was what did he say? How do you think about sort of instant gratification, and how is that important? And this mentoring platform, which is called Micro Mentors, really is instant gratification. The best way to think about it is like it's a Tinder. It's a Tinder for entrepreneurs and mentors. So you put up your profile and say, I need help on marketing or packaging. I need help on worrying about access to credit. How do I navigate that? And then you have mentors who say, this is what I know how to do. And you self-select, and it's very micro, immediate focus advice that you get if you decide that you want to make that connection. And I think what's great about that is that it is a very immediate way to provide support and tailored advisory support, but in a scalable way. We took that platform and we layered on cybersecurity and brought together a cybersecurity toolkit that's meant for small business owners so that they're able to be the first line of defense for their own businesses. And we're providing training to mid-career professionals, those mentors, around how do you use it? How do you start to think about cybersecurity for yourself, for your business, so that over a variety of different segments of the Indonesia population, you'll see this incredible uplift in terms of skills that enable them to be successful in the digital economy.
No, that's wonderful. I was going to say another bumper sticker worthy line, the Tinder for matching. Great. I mean, we're talking about education and fintech here. We got to have some sexy words in there to
exactly.
So I hear some key themes here, right? Young girls, education, vocational upskilling, etc. Let's link it also back to the fintech element. I mean, even about the education piece, right? Even from my own work on the field, whether it's investment ventures or humanitarian charities, one really hard obstacle is to drive adoption by correctly educating people on how a product or a program works. From your experience, Alison, what is the most effective way to teach financial literacy? What are the results of underbanked people, for example, gaining financial literacy in a manner that helps them make wise decisions that's optimal when you assess it?
Ilaria, I love the question because underpinning it is the effort is great, but really it's the impact that we want to see, and how do we know we're getting there? So one thing that we do a lot is rely on research and try to take those insights and translate them into impact. And so, for example, one of the academic research pieces that I particularly like is actually focused on the Dominican Republic, but was done by a professor at the London School of Economics that really talks about rule of thumb, actionable messages that have a causational relationship with change or adoption in behavior. And comparing that to a more traditional sort of classroom-based workshop approach to financial literacy, which I think the takeaway is that approach, while comprehensive, is too much. And so if you're an entrepreneur, you take time out of your busy day and you're time poor, right? You go to this workshop, it explained to you why you should be focused on profit and loss versus cash flow. And yet, you know that on your day-to-day, you need to worry about cash flow. So you take all of this information and it comes back and it feels like an academic exercise. You don't actually know how to translate that into your day-to-day work. And it takes too much time and effort to really think it through. And so this randomized control trial showed how do you do that? How do you change those into very small snippets of information so that you're able to implement it? And we took that concept in India and said, okay, it's India, right? Like how do you layer on the Bollywood approach to providing this information? And we created an animated female protagonist character who provides this information, and it's called Booty Money, which means smart money. And so you start to provide actionable pieces of information in a story, in a narrative, and then we can pull out segments of it to then continue to reinforce that with entrepreneurs. And it's been remarkable because what it allows you to do, because it's digital technology, is to go millions wide. And is adoption behavior as high if you're spamming them, right? Like if you're spamming them with this information? Not as much. So what we did is we layered on different types of tech and touch, right? Like, so how do you have some in-person contact? What would that look like? How does that change the adoption rate? And you can find that equilibrium of your providing as much information to as many people as possible in a cost-effective way. And then you're able to target those that you think need it most with that in-person support. So you're more effectively using the money that you have to both lift the baseline of knowledge, but then also ensure that there is hand-holding when hand-holding is needed.
Right. No, that's really good. And I think I really appreciate the cross-pollination too. I think between EdTech and also FinTech and upskilling and all of that, because clearly they all have to work together and not siloed. Maybe let me turn to Tilman for a little bit, and then I'll group everyone back together. Tilman, I would love to try weaving your biography together. Clearly, you've had an unwavering conviction on financial inclusion advocacy that has been the North Star through most of your careers, if not all, in private and public sectors, whether you were a consultant, CEO at CGAP, partner at Foundation, et cetera, clearly this mission has been the common string that has been driving you all this time. Where did this unrelenting passion about financial inclusion, where did this come from?
Thank you, Ilaria. That was a very generous introduction earlier.
Not at all.
Yeah, I grew up as a middle-class kid in Germany. You probably can still hear from the accent. And I had very early the opportunity and the privilege. I started actually as a journalist to travel and work in emerging markets in Africa, India. And I very quickly realized that people all over the world have the same dreams and aspirations. They want economic security for themselves. And very importantly, they want a better life for their children. And I also realized they work very hard, frankly, harder than the folks back home in Germany. What was missing was opportunity. There's other saying that you might have heard, right? Talent is distributed evenly, opportunity is not. And that really struck me at the time, and a little bit like Leslie, right? What really motivates is purpose. So I decided, let me try to make a contribution. And I've been at it for a long time now, in business, in public sector, as you mentioned, and for the last 7-8 years on the investing side. And I think that gives me a pretty unique vantage point. And that's helpful because financial services is a bit of a special industry. We can come back to that. And it really needs what it requires, it's an ecosystem approach to actually make a difference.
No, that's wonderful. I mean, you're also a firm believer of the principles of fair finance, which I, read up on your website, and that really is very illuminating, actually, because finance usually is a much more neutral word. But when you talk about it as a principle of fair finance, you bring the humanity aspect, the justice aspect, and really the flourishing potential of finance. For those in the audience who haven't read your article, do you mind explaining us a little bit quickly? What are these principles of fair finance?
Yeah, so finance and tech, by the way, both are
correct,
very powerful tools, and they can do a lot of good. and we are all in favor of leveraging their power to do good. But they also can do harm, frankly, right? Finance can go awry, technology can, there's dark sides to tech, right? Biases in algorithms, digital exclusion, these type of things. So given that they are such powerful tools, you actually need a moral compass to make sure they are used for the right purpose. And so we put down these fair finance principles, and we are very upfront about them. We only invest in line with those. And the 5 that we have distilled that give us sort of a guiding framework is, the first one is finance finance must serve the needs of real people in the real economy. The second is the business models and revenue models of the financial services providers need to be aligned with the interest of the customer, right? No hidden fees, no balances that people never can pay off. We then firmly believe, thirdly, and this is very much given how we now live in an online digital world, that people should know how their data is being used, and they should have some agency over that data. We fourthly believe that the digital infrastructure that underpins all of this should be open architecture in nature. It should be low cost and available to everyone. And then the whole thing needs to be regulated and supervised in a digitally native fashion. And when all these things come together, then we could have, we believe, and we've seen examples, right? Then we can really see the power of finance help people improve their lives, because ultimately that's the objective, right? Nobody eats money. You ultimately, finance is a means to an end. It's not an end in of itself.
That you just said a handful there. I feel like there definitely are people who see finance as, as the end. And unfortunately that gives birth to a lot of things that you just mentioned that you're trying to avoid: predatory pricing, all of that. So anyway, we're here to solve things. So we would love to focus on the bright side. We're conscientious about the dark side. Do you mind just, again, in a quick way, because we're limited with time, but we'd love to hear maybe an example of a success story and an example of a not so successful story of portfolio companies that you've come across in all the years. What worked, what didn't really work, and just a little bit of lessons that we can draw from some of your portfolio companies that you've seen. You don't have to name them if you don't want to.
Yeah. I name the success stories.
Yes.
By and large, we bet on technology early on, frankly, before the term Fintech was even coined. And we did that coming from first principles. We said, well, if you want to reach more people with better services at lower cost, you need a very different approach from the traditional brick and mortar cash-based economy, financial system type approach. So we came to tech very early, and by and large, we have benefited massively, first from the rise of the mobile telephone, and frankly, the pandemic and the economic lockdown and us switching to doing these things online and people working online and shopping online has given a lot of our portfolio companies and our investment theses, an enormous shot in the arm, right? So one big success story, a theme, is challenger banks, right? An app that allows you to run your financial life, no branch network, no legacy infrastructure, easy access. They have done very, very well, in particular in the US, because the debit card interchange fees are high enough to pay for the entire platform, if you will. And it's a great service, right? No hidden fees, no minimum balance requirements, none of these punitive things that traditional banks often do. So there's a great success story around challenger banks, similar insurtech, wealth tech. Largely, we are lucky to have a number of success themes. If I think about what hasn't worked so well, You know, you can get your timing wrong, right? You can be too early. So we were very early in understanding of or seeing this concept of underwriting credit on the basis of alternative data. There's 1 billion people at least who don't have a FICO score in emerging markets on the consumer side. Lots of small businesses are in the informal economy. And your cell phone data has predictive power, right? How you move and the number of unique incoming calls is an indicator of your creditworthiness, because it means you have a social network.
Right.
And so we invested very early in the 2G feature phone world. And that was tougher, much tougher than we expected, right? While there was predictive power, it was still expensive to actually deliver the service. You had to work through either telcos or banks, the B2B sales challenge that takes a long time. I think the era that we are now in of embedding finance into platforms like Yegan described earlier for OVO in Indonesia, the version 2.0 or even 3.0 of this alternative data-driven provision of capital, working capital to small enterprises will be much more successful than our very early experiments.
Yes, well, it's really a timing issue and a lot of factors that you can't control. So I think you can create the best company, but if the global technology is not ready for you yet, like you said, it may be too early, but thus the journey of entrepreneurship and investments. Thank you, Tilman. Now, I think in the interest of time, I will bring together both of you and ask you guys 2 important questions, because we would love to also see how practically people like you guys who are, seeing so many investments, so many initiatives with capital, you have that insight, that bird's eye view. And I think these 2 questions would be helpful. The first one, and this would be a semi-lightning round, so it would be bullet points type of answer, if it's okay, to ask you from your experience with purpose-driven fintech companies, are the successful use cases that you see in one country easily transferable to adoption in another country? And if not, why? Maybe we'll start with Tilman first and then Alison.
Yeah, by and large, they are transferable. Of course, consumer behaviors are different. Incumbent industry structure is different. Regulatory setups vary. But when you come up with a fundamentally new notion of doing something that is far superior to what there was before in finance, that will travel quickly, right? So I give you one example, is insurance. It used to be sold by agents who were very pushy, and on an annual basis, a lot of this first premium would go to the agent. Very bad value proposition to consumers, actually. Now you can embed insurance contextually in an experience or in a purchase or in an event, bite-sized, one click, embedded insurance, unimaginable, right? Just 10 years ago. That type of innovation and concept travels absolutely across borders. And the borders are really regulatory and jurisdictions, right? The ideas travel very quickly.
Yes, so it sounds pretty optimistic about it. What about you, Alison? What do you think about use cases, successful use cases transferring from one country to another?
I agree with Tilman. I think that they are transferable. There's always some percentage of adaptability that needs to be done to contextualize it. And I think the real key is, if you are consumer centric and the challenges that a consumer in one country face are similar to the challenges that a consumer in another country face, then all of a sudden you have a business model that you can start to think about transferring. And Tilman had said it earlier, the idea of putting consumers first and understanding what their needs are and solving for those needs, I think is the common ingredient of success for any tech company, fintech, educate tech, or any other tech-based approach.
No, that's wonderful. Okay, that's a lot of.
If I may, just one.
Please.
The entire notion of a great innovation out of India might inspire somebody in Nigeria or somebody in Brazil, or travel then to Indonesia, or the other way around, is actually the premise for our work at Flourish. So we are very thesis driven, in addition to principle driven, when it comes to identifying these investment themes. And then we very consciously invest in 5, 6 different countries, slight variations on the model, both to learn and to make sure that we create enough of a demonstration effect, if you will, so that lots of other people follow the good example and we are crowding in other innovators.
Yes, and especially I'm encouraged to hear this because in today's age where we're almost doing reverse globalization, when we're worried about isolationism, it would be such a pity if innovation stops on the border of a country, and especially with this topic we're looking at, mass flourishing, helping the underserved. It would be great if there's no borders and no boundaries, and successful cases can just export itself and help millions at a time. So thank you for both of you from that optimism. Now, I'm sad to say this is the final question of today, but this is just a start. But this is an important question, and I'd love to ask both of you. I know you both are firm believers in private sector and civil society's collaboration, especially making sure that any project launch should have commercial attractiveness so that the private sector players will commit for the long haul and not just for a short stint, etc. How do you incentivize private sector players to use fintech for good in a sustainable way? So let's go with Alison first, and then end with Tilman.
Certainly. So apologies if you can hear any noise. They're fogging in Singapore. So I think for us, we really believe that there is a role for philanthropy to help be tip of the spear in that sense. And what we've seen, whether it's with our own business or with other anchors in value chains, is that you can roll out products that are meant to serve a need of the consumer, whether it's a small business owner or whether it's a smallholder farmer. But that business case does not necessarily include all the wraparound services that make certain that that consumer is best prepared to make the right decisions for themselves, best prepared to optimize the benefits of that product, to understand where the cost savings might be or the time savings. And so we see that if you want to be successful, that you do need to think about what those wraparound services are. And if it's not built into the commercial model, then how do you start to marry and bridge between the philanthropic sector and the tech companies or the private sector? And we also see, in addition to that, a really important role for engaging governments early, so that they come along that journey to understand how can they create an enabling environment that's most supportive, without necessarily dampening innovation. And so that partnership is delicate to balance, and certainly takes time. But one of the reasons why we believe the private sector is such an important partner to engage is because there's this incredible push for scale, right? Like, and an accelerated scale. Like, there's not a patience of, well, it's a development process. Let's wait the 10 years so we can see sort of a generational shift in mindset. It's how do we get people to adopt today? How do we disrupt? And that forces the hand of both governments as well as civil society to start reconceptualizing how quickly can they make change, and how do you start to do that in a way that is financially sustainable, but more importantly is scalable. Because for us, that's where you see the transformation that we're ultimately looking for.
That's right. No, thank you. Thanks, Alison. What do you think, Tilman?
I have two components in answering your question. The first one is I do put my economist hat on when I think about a system, and I would say there is a role for government to play in providing the foundational public goods, such as identity. There's definitely a role for government to either provide or regulate the public utilities, and a payment system, a retail payment system may well be a utility. Private sector then should ride on top of all of this. Private sector competition should be on an efficient, low-cost infrastructure, and it should be superior value propositions that make people better off. And so I have this, it's not so much public-private partnership, that's a fuzzy concept. And sometimes it means that governments think that they can tell private sector what to do, or the private sector thinks, oh, government should pay me for what I'm doing. To me, it's more around who is best positioned to do what. And sort of economic thinking actually provides a pretty good guideline for that. And there's no doubt in my mind that the provision of retail financial services has to be profitable, and it has to be capital accumulating. Otherwise, it can't scale, right? Charity, no government, no charity can fund a credit gap, right, or an insurance gap. So we are really talking market deepening here. And when it comes to purpose, so private sector and purpose, we have learned, and I certainly fundamentally believe, that there is no contradiction between purpose and profits, right? It doesn't mean that everything that has purpose is profitable, but there is no automatic contradiction. And if you think about it, it's actually quite obvious. If you do right by your customers, right, you provide a superior value proposition, and the underlying economics work for everybody because you figured out something that wasn't possible before, and you do it better than everybody else, then you serve your purpose and your customers, and you are a successful business at scale that also will create shareholder value. So ultimately, we have to rely that entrepreneurs recognize that. We only work with entrepreneurs who do, and increasingly, I observe, and that might be generational, the next generation entrepreneurs, they're all purpose-driven. They want to make a difference in the world. So again, I'm actually really optimistic, Ilaria, that we are moving in a very, very promising direction here.
You know, I love hearing that, because in many ways, and I'm more a cynical person, I realize too, if not adopting the correct mindset, this world of tech, of fintech, I mean, previously I was an investment banker, so finance, if we don't adopt this healthy mindset, we spiral down the dark alley really quickly, because these are areas that also have so much money in it, so much ego and all of that. And so I'm just super encouraged by you guys, and clearly the world needs more people like you guys to call the shots and to inspire and to teach. So on that note, I just want to thank you both so much. What an honor to have you join us and wrap this final session for this panel. Thank you, Tilman. Thank you, Alison. So we're coming to the end here. There is just so much to unpack. Wow, so little time. This event, however, is designed to whet everybody's appetite just to get it started. And amidst a dark year for many, I am personally just so moved by all the people who have chosen not to focus on their own inconvenience and sufferings, but really channel their energy into creating life-saving positive outcomes for the underprivileged, such as our esteemed speakers today. So I hope that everybody here is inspired to continue the quest of using fintech for good. And we look forward to hosting you again at our next Grab Conversations.